Hello and welcome to Sectors Up Close. I'm Angeline Ong. Our focus today is on the energy sector and our guest is John Stoltzfus, Chief Investment Strategist at Oppenheimer Asset Management. Now, the energy sector has been a clear outperformer this year after a fall of 30% in 2020. The MSCI World Energy Index has risen 32% so far this year, outperforming major global and US benchmark indices. But while this index has energy in its name, what it really means is fossil fuels. This sector is still dominated by big oil producers, and it should therefore be no surprise why these companies have done so well. From a low of around $20 a barrel in April last year, the price of Brent crude touched $70 a barrel on Tuesday. And despite coronavirus restrictions being imposed in India and Japan, the oil market is already anticipating rising demand as the economies of Europe and North America reopen. So what is the mid and long-term outlook for the sector? Let's ask John Stoltzfus at Oppenheimer Asset Management. John, thank you so much for joining us. Before we get to the issue of climate change, I want to ask you about your outlook for the sector given the economic picture, the reopening and the price of oil.
Well, we would have to say in the process of reopening, we expect oil to continue to do well as we move towards an economic expansion in the U.S. from an economic recovery position. And we still are in an economic recovery, essentially, as we still are working our way through the COVID risk and the variant risk. But overall, we expect that the U.S. economy will ignite a global economic recovery, all very positive for the oil sector, particularly within energy. The reality is around the world, there are billions of pieces of equipment and vehicles that depend on fossil fuel. And what we're looking forward to, of course, is a transition. But the question is, how quick can that transition happen? And it certainly isn't overnight moving to alternatives. Not yet. It's happening, but the pace is relatively slow. And the irony is many of those vehicles and pieces of equipment that will run on alternative fuel need to be manufactured using current energy sources, which is fossil fuel.
So how would you tap into this transition play? How would you break the sector down into components that may do better than others?
Andrew, the way I would approach this essentially is I would look to diversify my exposure within energy. So in my portfolio, I would own traditional fossil fuel. I would try to expose myself essentially to portfolios that of companies in terms of their production that have a sense of greening at least, but I would also diversify utilizing investments in alternative energy. So one foot going forward and 1 foot being not backward, but rather where we are now. It's all about transitioning when it comes to energy.
So basically, John, giving your portfolio a tinge of green. The IEA, though, today said investors should not fund new oil, gas and coal projects if they want net zero emissions by mid-century. Given this and other environmental considerations, what is your longer-term view?
Well, the longer-term view is essentially that for now, looking at the horizon, it would appear to be that traditional energy, fossil fuel-based, remains king of the energy complex because of its position in infrastructure. Also, you have to remember how many people it employs and what the impact to many economies would be around the world if you restrict the production of fossil fuel too quickly and don't allow for the transitioning of the process of employment in that area. So we would have to think oil remains king, but of an ever-shrinking kingdom on a year-to-year basis.
Right, John, you mentioned the transition word. A lot of the renewables have underperformed the traditional energy sector. What's your outlook for them?
Actually, the outlook is quite good. We would think last year they were the outperformers. And what we saw is they may have become overvalued. They may have seen speculation, essentially too much enthusiasm too quickly for them. As a result of that, they saw a sell-off that has occurred this year. We would think it actually is a great entry point for investors who have no exposure to it, or an opportunity to dollar cost average their exposure to alternatives at this time.
Right, thank you. We have to leave that there. That was John Stoltzfus, the Chief Investment Strategist at Oppenheimer Asset Management. Now, before I go, here are some of the top stories in the energy sector. Colonial Pipeline says its fuel network is fully operational, but that it will take some time for suppliers to fully recover from a cyber attack that left thousands of gas stations without supplies. Nearly 12,000 gas stations were without fuel as of Monday, down from a peak of more than 15,000, according to tracking firm GasBuddy. As a result of the shortage, the national price of gas rose to a 2014 high of $3.04 a gallon. The group that hacked the pipeline, DarkSide, has said it recently hacked 4 other companies. Shareholders in Royal Dutch Shell overwhelmingly approved the company's energy transition strategy at its online AGM on Tuesday. The plan was announced in February. It aims to slash carbon emissions to net zero by 2050 through cutting oil and gas output, growing its renewables businesses, and through carbon offsetting. However, a second resolution filed by activist shareholders was rejected. It had called on the company to set, quote, inspirational targets to battle climate change. And finally, Russian Foreign Minister Sergei Lavrov and US Secretary of State Antony Blinken are among representatives from 8 nations bordering the Arctic who will take part in the Arctic Council in Reykjavik later this week. The 2-day meeting starts on Wednesday. With Arctic temperatures rising at twice the rate of the rest of the globe, the melting ice is creating potential new shipping lanes and has opened much of the world's last untapped reserves of oil and gas to commercial exploitation. And that's your roundup of the energy sector. I'm Angeline Ong, and this is Reuters.